begin. And again, it's great to see everybody here. I'm really hoping that the next time we gather, we won't be looking at each other in little squares. We'll be together in a room, and I'm very optimistic about that our meeting in January will be in person. And it feels like there is a big change ahead. So I'm hoping that that's the case. Because clearly we still have technical issues with this kind of meeting, and let's hope we don't need to refine them for any future meetings. That's my goal. Welcome to the meeting. It's great to see everyone here at our board meeting. Of course, these are public meetings, and so we have a large group of the public here, many who have interest and are working with us, volunteers, members of rescue organizations, our own staff, all joining us, as well as the general public, and it's great to have you here. This is a board meeting, so we're here to do some work. We're going to kick it off with a lot of financial work. We have financials to review. We have budgets to review and approve. We're going to hear from Risa in terms of what's going on in the shelters, a report from her. We're going to hear about our capital projects from Jen Peavy and Christine Kim. And then we're going to have our public comment section, which many of you are familiar with, but just in case you don't know how it's working in this online format, please in the chat indicate that you would like to speak. There's a 2-minute limit. We expect everyone to be absolutely civil and polite. It's a place to hear exchange ideas, concerns, to hear questions. It's not a place to make attacks. If that happens, we have to shut it all down. So don't ruin it for everybody. Be civil, be polite, and let us know what you're thinking. It's really important. We love to hear from everyone. It's a very important part of the meeting. I'd hate for it not to go as planned. So in the chat, if you could put your name, your full name, first and last name, and your email in case we need to contact you with follow-up information. Sometimes people have really specific information or questions that we need to follow up with outside of the meeting, and we want to make sure we're able to answer all your questions. It's really important. Katie Hansen will be moderating that at the end, and we will also do our best to respond as we can to each comment and question. But again, if there's need for follow-up, we'll do it outside of the meeting. Don't consider this to be the end of the conversation. And then I'm excited that we'll be moving, as a board, we'll move into a private executive session. And the key agenda item is for us to be discussing governance. And I just wanted to take a moment in the public session to thank Denise Incandela, our vice chair, for all the hard work and leadership she's given the executive committee in terms of working on this governance document, and the whole executive committee, Yonatan Aronoff, Elaine Keene, Karen Flight, and Corinne Schiff. We've been working on this for about a year, and I'm excited because it's really important as a board that we move forward as the organization moves forward. And I think that all of us on the board are going to be energized by this exercise and challenged to give more to the organization, to bring more of our skills and talents to the organization, and really have a framework for moving forward, since there's so much exciting things happening on the horizon as we move into our next 25 years as an organization. One last thing before we dig into the financials. I wanted to speak to our staff who's online here, and just on behalf of the board, thank you all for the work that you're doing. We thank you all the time, but I think during this pandemic, we can't thank you enough. You've been on the front lines rescuing animals every single day. We've never closed our shelters. We've never stopped providing essential services. And that means all of you have had your life on the line while you're doing it. And you've done amazing things to protect yourselves, your friends, your colleagues, your family. You've practiced social distancing. You've had to wear masks in the shelter system. And most importantly, you're getting vaccinated. And that is such an amazing thing. And I can't encourage everyone enough to seek out their vaccines. We've got a lot of work ahead of us, let's do it safely and with great health. And so with that, again, I'm thanking you all from the bottom of my heart, and I know the whole board joins me. Your heroic work is not unnoticed, and we just want to make sure all of us are healthy and in this as we go forward. So thank you again. And with that, a much less exciting but very essential thing, let's move to looking at our financials. I believe the first thing we need to do is have a presentation from Gina Manenti of Rosenberg and Manenti, who's going to present the audit for approval of our financials for fiscal year 2020.
Thank you, Patrick. My name is Gina Manenti, and I am the audit partner at Rosenberg Manenti, and I presided over Animal Care Centers of New York City's fiscal year ended June 30th, 2020 financial statement audit. The independent audit results. The next slide. In our opinion, the consolidated financial statements fairly present in all material respects the consolidated financial position of Animal Care Centers of New York City, Inc. as of June 30th, 2020, and the changes in its consolidated net assets and its cash flows for the year then ended in accordance with accounting principles except in the United States. If you could go to slide 3, I apologize. Perfect. Looking at the changes of assets and liabilities, we noted that the total assets increased over the prior year by $3,308,000. Looking at 2019, going from $80,392,000 to $83,700,000. That increase in total assets is primarily due to the assets associated with the development of 1906 Flushing, which approximated $2 million, and accounts receivable from the City of New York, which is approximately $1.4 million. Dropping to the total liabilities, there was an increase of $1,246,000, and going from $77,638,000 in 2019 to $78,884,000. That total increase in liabilities was primarily due to accrued construction costs associated with 1906 Flushing, which approximated $900,000, and the increase in the line of credit, which approximated $400,000. Going to the next slide. Looking at the changes in without donor restrictions net assets. This is where there's donations without any restrictions. Without donor restrictions, net assets increased from 2019 by approximately $1,328,000,000. Without donor restrictions, revenue support and gains increased by $1,485,000, $23,913,000 in 2019, $25,398,000 in 2020. That increase of approximately $1,485,000 was primarily due to the increase in general contributions of approximately $250,000, benefit plan contributions of approximately $270,000, and interest income, which was primarily due to 1906 Flushing, of $790,000. Looking at the total expenses increased approximately $980,000, going from $23,090,000 to $24,070,000. That increase in expenses was primarily due to the increase in the number of employees, mostly at the shelters and in admin of approximately $1,889,000. That was partially offset by decreases in supplies and services and medical operations of approximately $479,000, professional fees of $156,000, vehicle expenses of $135,000, and facility expenses of approximately $111,000. Turning to the next slide. And now we're looking at changes in net assets with donor restrictions. So these are donations that came in that were restricted either by purpose or by time. So in 2020, contributions received by AC&C with donor restrictions totaled $2,346,882,000. Satisfaction of those time restrictions totaled $1,613,102, leaving us a net increase at AC&C of $733,780. We ended the prior year, 2019, so kicked off July 1st, 2019, with a balance of $986,834 use with donor restrictions, leaving us a balance at fiscal year end to be used for future years of $1,720,610 in with donor restrictions. If we
Gina,
look,
going back
yes,
to the financials real quick. You don't have to go back to the slide. So
Yep.
what we're generally saying though is without the 800 for 1906's interest income while the money was there, we were basically flat. Is that fair to say?
correct. That's correct. If we look at the overall changes in revenue support and gains and the expenses as well, we saw overall support and gains increase 9.6% over the prior year, going from 23,848,581 in the prior year up to 26,131,804 in the current 2020. Overall expenses increased as well by 4.2%, going from 23,090,439 up to 24,070,263. And the last slide I'd like to discuss is really how we look at the major categories expense breakdown. One slide down, I'm sorry, next slide. Looking at major category expense breakdown, we look at program expenses compared to total expenses, administration expense, as well as fundraising. What are those percentage year over year? Are we consistent? Are we increasing or decreasing? And when we look at fiscal year ending 2020, there is little change in program management in general and administration fundraising as a percent of total cost compared to 2019, even to 2018 year over year. It's one of the analysis we perform. So if we were to look at the current year to 2019, for example, in 2019, total program expenses it was 87.6% of the total expense by AC&C versus 87.25, slight dip. Looking at administration, we'll see a slight increase going from 10.21% in 2019 up to 10.55 in the current year. Fundraising, again, a slight increase from 2.12% up to 2.2%. And that concludes the presentation. I don't know if there are any questions from the board.
With this last slide, how do we have a sense of how we compare to other shelter systems like ours in terms of the expense ratios?
Yeah, so if we were to look at this, if you think of it this way, out of every dollar in the current year, 87%, it's a very measurable target, and actually it's a very lean. So every donation, a large portion of that dollar is going towards those programs. So it's measurable.
87 cents out of every dollar. Yeah.
Correct.
Yeah. Thank you.
And we're comfortable with the allocations that we use with respect to what we consider program services, right? I believe that's part of the audit process.
Correct. The most significant portion that goes to the direct are actually direct charge. So they're actually coming from a timesheet that's directly charged and allocated directly to a program. There are allocations and estimates as you go through the financial statements that are very detailed on how they're allocated. So some of it, for example, could be if we were to look at occupancy expense, which is probably the best, you cannot charge occupancy saying X versus how much a direct charge on every dollar you pay on that rental expense. So it's based on the facility itself and how many people and the functions they're doing, and those are the percentage. And the one thing we always look for is that consistency. We're not changing year over year our platform. It's a very consistent way, measurable and reasonable and accepted in the industry.
Gina, was there a page that had more details on the expenses versus just these bars?
If we were to look at the financial statements themselves, you would actually go to the functional expense and you would see the exact breakdown by 2019 versus 2020 by function. And when I mean function, it's really from salaries to benefits to office supplies. You'll see that exact line item by line item. And the one thing we'll do is, that's the one thing we look at is when I went through the slides, I presented them. These are the major issues that cause those fluctuations year over year, but you'd be able to see that on the functional expense report.
Okay, and we're just not showing that now.
No, I do not have it here.
No,
The details.
not,
Okay.
not on here, but we have it as a separate document. It's just
Yeah,
not-
That is
I'm
correct.
looking for it. Okay,
It's going to
thanks.
be, if you turn to page, if you have the financial statement, if you turn to page, hold on, page 4.
Yeah, I was looking for a lot more detail than this. I will take it offline. I think in the board, we usually present a deeper level. Yeah,
Correct.
which we can,
Correct. Walk through the
Okay.
entire financial statements. That's correct, Denise. That is correct.
okay. Thanks.
Okay. So we, the board, need to approve this audit. May I have a motion to do so?
I'll motion to.
And a second?
I'll second.
All in favor? Everyone on mute? Aye.
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 That's
Aye.
approved. And sorry, I jumped right into our financials without doing the first approval that we need to do, which is the minutes from our previous January 2021 meeting. May I have a motion to approve those minutes?
So moved.
And a second?
Second.
And all in favor of approving our minutes?
Aye.
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 The minutes are approved. Thank you, Gina.
Thank
Now
you.
we will hear from Jeff Hauser at Kiwi, Sandra Reyna, our own Director of Finance, and Jen DiClemente on the FY21 year-to-date financial results, and also our overview of fiscal year 2022, the budget.
Yes, good morning. Yes, you will basically see that this presentation will cover 3 different areas, although we may change the order just a little bit. So I'm going to introduce where we are with 2021. We will probably then go to the operating budget, which I know you see on the bottom, and then we're going to come back to the development update. Okay, next slide. While the 2020 audit presentation was important, it's hard to believe, but it's almost old news already, as we are now 11 months into the fiscal year, so we only have 1 more month to go. What we're looking at is the preliminary statement of activity summary through the 11 months ended May 31 of 2021. ACC has increased its total net assets thus far on a consolidated basis by a little bit over 1.1 million. That 1.1 million is a combination of 1906 Flushing net asset contribution and unrestricted and temporarily restricted funds. The unrestricted that relates to the shelter operations are a little bit better than a break even. You'll see that's about $5,000 or so, as in the expenses and revenue are about equal. So we have taken in, we have recognized about 15.4 million of revenue. That's the actual column. And the expenses are just about the same, $15.4 million. The operating budget, when it is put together, is based on the projected change in net assets that is unrestricted. So it does not contemplate the interest and the expenses related to the Flushing construction. So therefore, on a apples to apples basis, the budget had contemplated maybe a negative 31,000 revenue minus expenses, and we are about there actually at a positive 5,000. You will
Now
notice that.
looking, looking at the revenue, the 15.4, right?
Yeah.
Obviously, the largest line, which is the DOH reimbursements, clearly that's a fair amount of timing. I mean, right, I know we haven't submitted our vouchers back through, I think, February, and I'm not sure what we've collected as far as months go, but I know there's several months still unsubmitted and uncollected. So I have to think of the primary variance with that line item is timing, right?
It's a little bit more nuanced than that. Yes, it's part of it. However, as part of our revenue recognition preliminarily, we do accrue, for lack of a better word, based on a projection of what we expect to invoice DOH. So now, just to kind of respond a little bit more, the expenses are actual as incurred, and they are less than what was included in the budget, as mostly COVID related, that we weren't really sure what the year was actually going to look like. So there were certain projections made before COVID really took hold. And you will see, as you look at the expenses, that for the most part, every line item is actually a little bit less than budget. And what that means is, because that DOH is on a reimbursement basis, that the DOH reimbursement, the revenue you take in, is going to fall directionally the same way. And so
yeah, right.
that's
So
what
yeah, exactly. You've got this is all accrual presented. So we're really expecting that we're going to receive less. We're also going to incur less.
In some cases, absolutely. And then also, unfortunately, it was a year where we, for lack of a better word, underperformed, but just based on a budget comparison only. We are less than budget in shelter income, and we were less than budget in individual giving, and we were less than budget in event revenue, almost all of it COVID related. And for more detail and color on that, Jennifer will talk later, and she can give you a little bit more information about that. But that was as we had discussed in the last meeting. So that all is a part of this.
I know it's COVID related, but even that shelter and outreach income, 50%. I mean, maybe it's all COVID related. It just seems that that's obviously, unfortunately, very substantial. Any other context we can say beyond just COVID, or not necessarily?
If it's okay with you, I'm probably going to leave that, because I think Jennifer will be talking to it maybe a little bit more later. But
that's fine. That's fine.
And the reason why I say that is some of it may have related to when the budget was put together, as to there may have been certain assumptions made when that was put together about what was reasonable and what wasn't. And again, COVID does impact all of these things. And so there was no real playbook for that, and no way to really benchmark it very well. But again, we can talk about it a little bit more later on. I promise I won't kick the question down the can too much.
Yeah, hopefully Jen can help us too, because I feel like I've always seen that line as shelter income, and so I'm not sure what outreach, what component that is. So that's something that hopefully we can answer as we move forward as well.
Or maybe we can answer right now, just because the question is coming up now. It'd be nice to answer it as it comes up. Is Jen here?
Morning. So I can talk about, what we experienced specifically for not shelter income, but fundraising. And some of the main factors that affected us were, we had, a lot of large grants that came in last spring specifically for COVID relief. So when we put the budget together, those weren't necessarily renewed in fiscal 21. Obviously the less event revenue, and then we had instances where grant funding was extended instead of renewed because programs were on hold. Those were the main places that we saw a decrease in for my budget report, and you can see that in your packet too for our year-end review. But I don't know, Jeff, is there other things I should touch on that you think?
Those are the major points.
Okay, then Jeff, jumping then down to the expense side, taking the largest item there, which is obviously personnel services. Can we quantify that in some respect? So I assume that's a direct function of headcount being very low in comparison. Is there a way to put that into some more context with respect to the headcount, assuming that's the primary driver there.
It would be. It would be an average census during the course of the year, including months where, again, we were deep into the pandemic. So staffing at the various shelters was not where it is as of today. So our census now is probably high. It was definitely higher than the average census during the course of the year.
So would you say month by month we've trended sort of back to where we
Yeah,
we
and in
envisioned
fact,
ourselves?
yes, and when we look at the 2022 budget, you will see that expenses are about to ramp up again, and again, it's based on activity, and
Okay.
it presumes we are done with COVID and restrictions, and all of those things are now to bounce back, God willing.
Okay.
Any other questions on this slide?
Well, maybe Risa could jump in, because again, I know David raised the question, and we know that in COVID, we've had to operate so differently in terms of shelter operations and shelter income. But again, I think we're all just curious about that large change from budget to actual for shelter and outreach income. Can we have any further information on that?
I can jump in
Yeah.
on that, actually.
Okay, I defer to you, Sandra.
There's also one component when we were creating the budget for fiscal 20, yes. We had a deficit gap between revenue and expenses, and there were two categories where we ended up sort of plugging in additional revenue goals. Partially, part of that went to the fundraising goal for Jen, and part of that was included in the adoption shelter income line. So in a way, that revenue was inflated, and the fundraising goal was more aggressive than what we would have wanted to
Okay.
include in the
So-
budget.
So there's a sort, let me rephrase it. There's an aspirational component in there that we hope to aspire to. We didn't quite, but we understand it wasn't necessarily related to something direct. It was
Understood.
more of a,
We were
an
in a
aspiration.
pandemic. We set very high goals for our fundraising efforts, and we were impacted by the pandemic in terms of achieving these aspirational goals. Can someone please explain what the outreach aspect of income is to me? And I apologize that I don't know that, but it feels like a new term to me.
There's I'm sorry.
Go ahead.
Is any of it in kind with respect to receiving food and community
Thank
pets
you.
and things like that? So
Okay,
maybe
I
there's an
wasn't sure where that
in-kind
line was.
Yeah,
Okay,
not sure if
Thank you.
that's the case.
understood. In kind, I totally understand. I wasn't sure what outreach meant. Thank you.
The other thing to keep in mind with shelter income, it's not just adoption fees, it's also fees that we collect around people surrendering animals. And, we just didn't have people coming in for months. So that was also like what we would look at as a loss of income.
And I think we're all aligned in the idea that we've been very humane and understanding around these kinds of fee collections, particularly during a pandemic, and that we don't see it as a way to make money, but it is a way to cover some of the costs. But we aren't seeing it as we don't pursue these fees aggressively, but we take them when people can give them, and we also invite people to make donations on top of any of those fees when they are coming to us for services. But we aren't in the business of trying to make money from these things.
Any other questions on this
Yeah,
slide?
I just have a question. How did we do in terms of the previous year? This is against budget. How did we do against 2020?
I don't have the other slides that she had presented, but we are going to have less expenses in 2021 than we will on 2020. We're also going to have less revenue, but the
Well,
net
I
asset is going to be positive.
I was concerned about that same line, that shelter and outreach income. How do we do against last year?
I might be able to look it up. See if
And
I
then
can find it.
Jeff, I would say going forward, it'd be great to have it versus budget and versus last year.
Yeah, it's a better.
That would be great.
For
Just looking
FY
at-
21 and then, or for 21, and then for, even for 20, it would be great to have more detail. Like this kind of level detail versus budget and LY. But for here, let's make sure going forward, this always has versus budget and LY. It just, let's anticipate the question. It's a typical question.
We always
Totally
ask.
understood. So
If
long
you
as we're
look at
going to
the
agree.
financials,
So
June
going
30th
forward,
June 30th
the
comparison.
lines that are here are okay, but we're going to add some columns for a prior year comparison. That's what we
Exactly.
agreed on? No problem.
Absolutely.
Yep.
there's
And so
clearly
you'll
room on
have
the
your
page for more
variance
columns.
dollar, variance percent to LY as well as to budget.
Consider it done.
Yeah.
Thanks.
Excellent. Thank
I
you.
had a question around
looking-
individual giving. I know COVID, but there are other organizations that actually saw individual giving go up because there was less event giving. I was just wondering if we could get into that a little bit as to what happened there.
So I can just jump in quickly and I'll go, when it's my slides, I'll go over it a little bit more. We did see an increase in individual giving from fiscal 20. So that's an area that we definitely focused on and pushed. When you see it compared to the budget, that's where I think last year's numbers would be helpful because that is higher than last year. But the budget, like Sandra mentioned, was put in such a aspirational way that it looks like we did a lot less than we really
So-
should have expected when we
so-
actually have done more.
So Jen, what was the percent increase to last year?
For individual giving overall,
Yes,
about-
I think that's Karen's question.
about 5%.
Okay, so almost flat, just slightly up.
Slightly up, but I think that yes, slightly up. But I'm still thinking with COVID and everything, the way we grew individual giving is an important factor.
Yeah.
I do think, I agree with Karen. I do think that our major gifts in particular, I don't want to say we necessarily missed an opportunity, but I feel like there's a lot more we can be doing with that. I know we continue to set high aspirational goals for it. I know other organizations have offset some of their COVID losses with major gift. I would like to see a more strategic push for that next fiscal year if possible. And if we need to bring in additional resources to help folks on staff design a major giving program to help us in tougher times, maybe we can talk about that. I just think there's a lot more to do. And I don't, 5% is basically flat. I'm not saying we shouldn't, commend ourselves for the slight increase, but we can do a lot more with it.
Yeah. Yes. And one of the things I'll talk about too on my slide for next year is with the opening of Queens and the new shelters, we are definitely putting together a strategy to solicit major gifts around that along with donor recognition. So like a mini capital campaign basically. So I think that is definitely on our radar and I would love to work with the development committee and if you want to join further too to talk about ways to do that. But yes, definitely. And like you said, maybe some more resources because we are a staff of 2 people and it's a lot.
I think it's also thinking strategically, like Jonathan said, versus tactically. How do we want to overhaul the way that we approach this and how do we react in a crisis? And so we're here to help. So maybe we can spend a little bit of time thinking about how to craft a strategy, that is differentiated and keeps into context what best-in-class players are doing, understanding that we're a small team, because the strategy, I think right now, Jen, is a little tactical. So it's just thinking that through and how can we help you with that? Because it's the big lever and it's the big lever everyone was focused on over the last year.
Yeah.
So adding on to the conversation, and we may, I guess, talk about this a little bit more later is, how do we think about spending money to make more money? Because right now our fundraising at just over 2% is, it's laudable that we're spending most everything on programs, And certainly we don't want to spend a lot on administration, but sometimes you have to spend a little more to get more. And, you know, I'm not sure if we've benchmarked that 2.2% against similar organizations, but instinctually it seems like it's slightly on the low side, which might be why our giving and stuff is on the low side. So
Jen and I have talked about that relative to other non-for-profits, especially in animal welfare. One of the things that works to our advantage is our substantial contract with the city of New York, which is $15 million, and they're funding our salaries, the admin costs, so many of our programs, so that our development department is much smaller compared to other animal welfare not-for-profits that don't have that type of funding. And it is something we can consider, but we're so program driven. One other thing that I think is really important to mention is the in-kind that came through the pandemic. You know, you talk about crisis, there was so much in-kind donations from major foundations and corporations, the ASPCA, Petco Foundation, that they were handing things out. If you needed food, there were food pantries. We were availing ourselves of a lot of things that weren't checks. And I think when you think about the pandemic as a crisis, it was a crisis for people, and we were able to manage through the crisis without needing to dip into this, we need more money, we need more money. There were so many people helping out in this situation. What we needed was to provide resources and supplies. And in terms of being short-staffed because people were sick, and when we get to the operational slides, you'll see with the intake, there was, you know, the population was lower. So while it was still chaotic and scary and living in a crisis, I don't think that the crisis was necessarily in animal welfare where we needed to raise money to save more animals. We had a lot of help on the in-kind side to help us get through the pandemic. The human side of it was really something that we really could have used more help with. That was really the challenge. So, you know, in comparing us to other animal welfare organizations and developing a bigger development department, we should really have a conversation about that and see what money we can use for that, because the DOH contract is specifically for our programs and our salaries, et cetera. So to grow development with a bigger department, you know, they're very interrelated, and we've been very hesitant to do a huge push in that regard, because it could cost a lot of money. Just for example, you know, looking at what other organizations spend on their gala, just to put a gala on, they're spending $250,000, whereas what we've done in the past is kept it, you know, at 60 or 70, and so the return on the investment may be the same, but we are very well, you know, very interested in growing our development team. And we would appreciate the board's input or whatever external resources that you can help us with to do that.
Yeah. That makes sense, Risa. We can offline, because I get it. It was a tough year, but we will figure it out going forward. Let's whiteboard it for how we want to think about it going forward. Are we ready to move on? Yeah.
So the following is the balance sheet as of May 31. And as I'm thinking this through for the next meeting, I will also include what this looked like at the end of the last prior year. So, but this is at a point in time, and it segregates out the net assets for the shelter side versus the net assets from the 1906 Flushing side. So while the organization wide has total net assets of 5.9 million as of May 31, 3.8 of that relates to the shelter side. We have 3.1 million of cash on hand at the end of May 31, which is certainly better than when we met the last time. Of that 3.1 million, 2.1 million is temporarily restricted. The other good news compared to when we met last time, all of the invoices that have been submitted to DOH to date have been paid, including the large amount that was left over from fiscal 20. And so what's left on AR is basically amounts that are about to be submitted, which is for March, April, and May. And so what's here is the projected amount of those invoices, which is 3.5 million.
That
You might
line is pretty
recall
much
DOH
exclusively New York City. That line's pretty much exclusively New York City.
almost entirely.
Vouchering.
That would be correct. As you all recall, we get an advance equal to 25% of our annual budget near the beginning of the year. Some of that has been recouped. It was recouped with the February invoices, but we still have just under $3 million that is left to be recouped. So as we collect that 3.5 million, that 2.99 is going to be recouped. But again, the balance sheet is starting to clean up considerably. The other item that I'll point out to you is the line of credit. We had been carrying a balance for most of the year to support the outstanding invoices from DOH, which have now been repaid. That LOC has been paid in full. So there is nothing left at the moment from 20 and 21. Any questions on the balance sheet? Next slide, please.
No questions.
Thank you. Next slide, please. Thank you. There you go. So this is just the cash flow summary, and it is put together the same way. And it's basically a byproduct of that balance sheet and statement of activities that you saw in the previous two slides. And so as you will see, we have taken in from cash from operating activities for the shelter operation, that first column, 3.3 million, most of which is the DOH advances, as you'll see, which will now be recouped. So this won't, that cash from operating activities will change a bit. And as you noted, as I noted in the cash from financing activities, the reason why it's negative is we repaid the line of credit balance that was carried over from the beginning of the year, but it is a positive net cash flow, and you can see how that generated cash on the bottom row. So any questions on balance sheet or cash flow for May? So, so the remaining two parts of the presentation, one we started to talk about a little bit, which was the development report. We could go back to that. The other item we have is we want to introduce where we stand with the 2022 operating budget. And I'll ask the group, which one would you like to look at first?
I'd suggest we move to development and then move right to this budget question for FY22.
Perfect. Next slide, please.
Hi, so I feel like we kind of went over some of what I was going to start with, but this is where we are so far through the end of May. We did bring in over the last couple weeks another 25,000, so we should end fiscal 21 at least 3.1 million. So, and I wanted to share some of the highlights, even though obviously it was a difficult year. We have really focused on sending out a lot of proposals to foundations, especially new foundations. Some of them come in with smaller amounts, but that's still really important for us to diversify our donor base and our funders. And so we're able to secure 190,000 from new funders that we'll continue to reapply for. We did see growth with individual giving, which, as we've talked about, is a really important area to continue to grow. And online Giving Tuesday was really successful, continues to perform better every year. So we'll keep on track with doing that and sending out frequent appeals. We also saw a strong response from our direct mail appeals. And since our most recent mailing hit last week, we're up about 3% from last year with that, while we cut our cost of mailing and have seen a net revenue increase of 45%. So that was a really big strategy this year, was to see how we could streamline that process, mail smarter, which we did. So I think that was really important this year. And now going forward, we're really thinking of acquisition strategies and how we continue to build that program. But the net increase, the net revenue increase, I think, was really important.
That's great.
Hey, Jen, sorry, and if you don't have these, no worries, we can follow up, but what would be the percent increase for each of these rows to LY? And then maybe next time, if you don't mind, you can compare FY21 to FY20 and then with a percent increase. But do we know it, institutional giving?
So institutional giving was actually down a little bit, and that was mostly from what I had mentioned earlier, which was we had at least $250,000 come in for COVID relief specific from a lot of foundations in spring of last year. And then there's grant funding that was extended instead of renewed because programs had been on hold. So instead of getting new money coming in, now we have sort of had to extend those programs. So we are down a little bit in.
What was the percent decrease?
I can do it really quickly for you, but it's about $300,000. So.
$300,000 of the 1.9.
It's about 2% down. Oh no.
No,
20.
that doesn't. It's 20%.
20%.
Yeah, that's a big number, Jen.
Yeah, it's about 300,000 to 400,000 in a lot of those foundations giving a lot during COVID.
So institutional giving took a huge hit. It was down 20. Individual giving was up 5. And then the other two, 5%.
So we're up from last year and what City Council promised us from 41,000 to 59,000. So that money will come in soon, but that's what they pledged for this year. And then we are down obviously in special events from
about like 50%.
I think a little bit less than that, but from
496
about
yeah,
200, 430 was last year.
Oh,
I
it's
guess
just
even with the world potentially reopening, it sounds to me like going from the 263 to a budget of 380 maybe sounds a little more than just aspirational. That may sound a little aggressive to me, but unless you have plans that you think you can achieve that.
So the gala last year, I think, hopefully with Spring Fling being in person again, if we can normally raise about the 80,000, that's part of it. And then my goal, we raised about 220 for this gala. So I'm, it is a little aspirational to try to get to 300, but I'd like to, if we still.
We might as well try.
Last year.
Fair to try.
Jen, the other thing that I think would be helpful going forward is if we could look at individual giving not as a lump, which goes back to of what Jonathan was saying, because I think it's important to segregate major gifts, online donations, and all of that. So
in your packet, actually, you have a fiscal 21 year-end report, and so if you look at the second page of that. That was sent out. You guys can see it's just not on here, but we could put it on slides in the future.
And the other thing that I think would be helpful going forward is if you could create a donor pyramid so that we could actually see where we are, and that could speak to the strategy of what we need to focus on. I mean, outside of what we get from DOA, of course.
Okay. I think you go to the next slide, Jeff. So this is also, you have a fiscal 22 strategy that breaks down the revenue goals and more specific plans for next year. But overall, I talked a little bit about with the opening of Queens, updates in Manhattan and Staten Island, and soliciting major gifts around that. Working on putting that strategy in place and installing donor recognition areas, which I think will be a good start for us to really focus on major giving. And we did, continue to cultivate relationships, I said, with foundations. We did see a lot come in matching gifts this year, over $100,000, which is an area we continue to focus on. And I think that's been doing really well compared to other years. I feel like we talked about most other things, but I do look forward to if we can have a smaller meeting or offline more about development and strategy going forward.
Sounds good, Jen. Thanks for all that you did this year. I know it's been super tough. It's been a tough time to be in development.
Yeah, thank you.
For sure. Thank you.
Next slide, please. So this may be a little bit, no, I'm sorry, the next slide. Thank you. I hope that you all can see this. I know it's a little bit small. This is a summary of the 22 budget that is being proposed. It was difficult to look at this in relation to this past year actual, because this past year actual was just so unusual that using that as a baseline to help us decide what the 22 budget would look like was kind of difficult. So the starting point actually was the expectation going into 21, which is why you see here the fiscal 21 budget versus the fiscal 22 budget. But this was a bottoms up exercise. So all items that you see on there in the expenses were built bottoms up. And here would be an expectation of what 22 is going to look like, fully staffed, post-pandemic kind of environment.
Now, starting on the revenue end, so you've got contract revenue of 17.4, so that compares to the current year's 18.4, right? So we're saying that our expectation is to get $1 million less. Is that fair to say?
No, what that means is that the DOH contract revenue line includes the $14.950 million we received from the contract budget. And it also includes about $2 million of the 1906 new location budget, which is pending review and approval from DOH. So that's a combination of both.
So there are other parts in here that aren't specifically related to program services generally. Okay, so we'll need to get a breakdown of that separately. Okay.
Once the budget is reviewed by DOH, we can provide that information.
So what I totally get why we're incorporating the 21 budget into the 22 budget for all the reasons that you just spoke to. In some cases, there may be lines where actual did actually better than anticipated, like, the giving that Jen was talking about. Do we incorporate, as we thought about the FY22 budget, not just FY21, but FY budget, but also actual?
Yes, definitely. So behind these numbers, there's a lot of thought process. We're looking into the past year and years prior in some categories. And then also thinking about what we are receiving from DOH plus what Jen's or development's goal, fundraising goal is. So by looking at those revenue numbers, we work from there and say, this is what we anticipate to receive next fiscal year. This is what we can do in terms of expenses. So it's a combination of all of that, actuals, prior years.
Like for instance, actual salaries were about 11.3 and you're budgeting 12.3. So you're building in the discussion we had about headcount returning to better levels in the fact that you're budgeting not at the prior budget level, but you're incorporating the additional headcount, right?
Correct.
And some new staff at the 1906 location. I don't know how big that was off the top of my head, but there is some of that as well.
What's our confidence in getting the first row, the contract revenue from DOH?
Well, the $14.950 million, that's something we get every year. That's our base contract budget. And again, the additional $2 million will be contingent on the review and approval of DOH once we submit that budget to them.
Okay, and there's no concern with the mayorally race and all of that, that from a political point of view, that could change?
Well, it sounds like there is still an aspirational component to this in the hope that they'll approve. So it could be a lot of factors.
Mhm.
Just to clarify, that 2.4 million, that's a budget that was written based on Queens coming online that Jen will talk about in the summer of 22. And so we have to staff it up. We have to train people. We have to come up with a plan. So that extra money is not aspirational. That's what we have in our 34-year contract. We have a certain amount that's allocated to Queens, but it's part of a separate budget. So the 14.5 or 7, it remains the same. We got it this year, we got it last year, and we're getting it fiscal.
Thank you.
Gotcha.
Thank you for that clarification. So this is not that sort of incremental funding that we've received
Correct.
at various levels the last few years.
Correct.
No,
This is not a one-time enhancement. This is a budget.
Thank you.
The thing that Sandra is referring to is DOH we submit all the line items of how we intend to spend that budget. DOH has to approve it. Whether they approve more or less, that, to your point, Denise, we don't know. That it goes through an approval process.
Yep, fair enough.
So that makes sense. But then in that context, as a separate document, it would be nice to get a breakdown of this with respect to location, facility in some regard, so we can understand the Queens ramp up component versus Manhattan, Brooklyn, et cetera, as its own item.
Noted, we'll split it for the next presentation.
And what was the rationale for the shelter and outreach income decrease?
I think this came up just earlier when we were talking about development. This is one of the line items where in past years, I believe, plugged in or increased it just to close that deficit gap. And now by looking at the actuals, we're trying to be more realistic on the numbers we put in the revenue.
But more than just that, is this line in the actual financials, you have shelter revenue and in-kind contributions separately. And I'm wondering if there's a component of this that is meant to include in-kind, because I know in-kind went down about 300,000 and then shelter revenue went down about 200,000. So I think more of the decline, maybe a touch more of the decline, is with maybe in-kind contributions, if this line item is meant to be a combination of the two. Is that not right?
It's not meant to be a combination. The shelter and outreach income group includes shelter donations, adoptions, any fee related to programming. I believe the in-kind donation is represented in a different group.
In a different line. Okay, then that leads to be more concerned about the decline. So, okay, yeah.
Sorry, did you say why the individual giving was down so much? If I missed it. For FY22.
We were talking about shelter income.
Yeah, no, I just switched the topic, sorry.
And yeah, so individual, and your question is about individual giving.
Yeah.
Actually, this is
right.
Right, and I believe Jen addressed the difference year over year.
Sorry, Jen, I missed it. What's the reason why it's 600,000 down this year to
Why
last
we're
year?
budgeting less? I mean, I think
Yes.
it's what Sandra just had said again, that this is much more realistic in what we can actually expect to come in. We always want to do better than that, but to budget so high and then show that we didn't make it, like it
But
didn't
we
make
did 808 this year.
We did do 808 this year.
So why are we budgeting? Sorry, am I missing something? If we did 808, why would we budget 725?
Sandra, do you wanna-
I think we just want to be conservative with the
500,
numbers
no?
we have here. Yeah, we're trying
Why
to
would
be
we
conservative.
budget?
with the
We're
numbers we have.
already year to date 808, why would we budget less than where we are year to date? I might be being sick. I just don't get it.
Oh, I mean, we're generally aspirational in the other categories, so why would this one not be aspirational?
I also think one of the reasons this is so different is that some of the, for instance, individual giving includes direct mail, planned giving, contributions from major gifts, miscellaneous, other funds. In past years, these smaller funds included in the individual giving that you see now were part of a different category. So
It
what we
actually
tend to do-
the dog licensing too, because that's donations that people give when they sign up. So that's where it should equal the 725 plus the 75.
You can see how confusing it is to have these variances of how we're accounting for these lines. It's really hard for us to follow. We shouldn't see these kinds of like different, as we move from sheet to sheet, these differences, because it just causes all these confusing questions. But I see what the point you're making. Thank you.
Yeah, I think it'd be helpful if we had FY21 actual on here and then.
That would be hugely helpful.
Yeah.
A forecast for how it end the year even, I think would be best.
Yeah. But my reaction is that the individual giving, I don't know why we would want to take the budget down so low. And I guess my question would be not just where we were running, but where we were running in previous years, if you're saying the budget doesn't make sense. It feels like a low number to me.
So Denise, just in case you missed that last bit, DOH dog licensing revenue was included in the individual giving roll-up that we saw earlier. So it's at 800,000. So it's essentially flat, but it's flat.
Okay.
Not aspirational at all.
Okay, so maybe we just need to work on the template of what gets shown in these meetings,
exactly.
so that we can let's make sure the definitions, to Patrick's point, are the same from page to page. Let's make sure we always show budget and last year and percent variances to everything. We can just anticipate all these questions just so we can get through these.
Well, and can I just say something? That because it's been such an unusual year, we might even want to go back a little bit further, like pre-COVID versus,
Double LY is what we were doing it in the business world.
Yeah. Yeah, because I just think it's, comparing to 2020, that was a very unusual year. So I don't know, I think we have to take a further look back.
We're going to look, we should look at 2019. The next question would be, after we get through revenue, is salaries. I think it's going to be very hard to approve this with the limited visibility that we have right here.
Yeah, I think we'll have to. I think we'll have to have a special session for approvals, because this is helpful to an extent, because I think we're setting the groundwork for how, as a board, we want to be seeing our financials. But it's not helpful for us as a board to be able to vote on this budget today, unfortunately.
That's fine. We can definitely rework this.
And we only first got it at 8 o'clock last night.
Yeah.
I have a question on the expenses, which is smaller compared to the others, but what are client supplies and activities? Because those are up $300,000, just not sure what they are.
So client supplies and activities is the category where most of the shelter operational costs fall into. So think of like from pencils, office supplies to the food, medical supplies, etc. And in fiscal 21, it was a little under budget, and it is also higher because it includes some startup supplies for the Queens location.
But if that's the case, then it's very much of an inconsistency, because if you go to the financial statements, the supplies and services operationally is only showing actual of 600,000, whereas supplies and services medical is showing $1.7 million. So I'm not sure how to read these lines in comparison, because it seems like The medical services is the larger component, not the operational, when you go to the actual financial statements versus the budget. So I think there's an inconsistency in how the chart of accounts is being rolled up here.
Yeah, and we also have to consider that the financials that you are reviewing, that you just approved, they're coming from a database and a system from a different group, from BTQ, and we are now creating we have our own database, internal database. We have a different chart of accounts, and we're trying to make it consistent across the board in presentations, development reports, et cetera. So there will be those differences and discrepancies in categories and groupings.
Right. So maybe we can see a
one-time
mapping of what was where it was considered last year, what it's considered this year, just to understand how it's transitioning would be helpful.
David, just so you know, Sandra did supply us with a new mapping. So we're looking at this separate category. So you're going to see what we're going to end up doing on the financial statement audit next year, reclassifying and explaining it to the audit committee of those changes. So if they start reclassing out of medical, feeling it's more appropriate, we'll test it. If it makes sense, we leave it. We're going to explain that transition, that reclassification, and why, so that it's just so that it's transparent to the audit committee.
Okay, well, can I see that document by any chance?
That would be the mapping that Sandra you had sent to Jennifer.
Right.
Yeah. I can send it offline. Yeah.
So maybe we'll move beyond this, and then maybe if you don't mind, we'll add in FY19, we'll add in FY20 actual, or 20. Sorry, am I getting the years wrong? These
No,
are.
you have those right. We're talking about a 21 projection. You have them right. Yep.
Yeah. So let's add 2 years back. Let's add last year. And then let's keep the budgets and then do the better, worse variances, and then we can take a look if that works.
And we will harmonize all the various rows so that they're basically the same roll up on all slides.
Thank you. We appreciate that.
That sounds great. So I think we should move to Risa's report, and we will, as I take this up on a separate special meeting to approve the budget once we have all the detail in place that we need.
Sure.
Thanks.
Okay, jumping right into the ACC report. I just want to echo what you said, Patrick, to really thank everyone who helped us get through this crisis. Really was a human health crisis that none of us have ever experienced before. And so there was a lot of adjustments that needed to be made. And I think that the staff just were unbelievable in just pulling through and coming to work. And as we all know, there were some very terrifying months. And it is exciting to see that we're slowly getting healthier and vaccinated and slowly moving toward a place of recovery. But the staff really have been tremendous, and the support that we got from the community, from our volunteers, from the board, from the city. I know Christine Kim is going to present later, but Christine's advocacy for ACC throughout the pandemic, so much was going on behind the scenes. Even while things were in lockdown, we were still coming to work and still really doing the best that we can in the most difficult of times. And I know that everybody went through something, but the support that we received really sustained us. So I really want to thank everybody.
Hey, Risa, you guys were on the front line, and it is extraordinary how you just powered through it. And, we're there for our animals, and we're there for our city, and we're so grateful. And, we're not first in line for the vaccines, but still powered through it. And, we're just so grateful as a board to you and your leadership and, the ACC team's leadership team and every individual that contributed to supporting our animals and community over the last year and a half. Really grateful. So thank you.
Thank you for acknowledging that. Appreciate that. Okay, so we'll go to the first slide, just really just to sort of set the presentation. Now, I just want to set the record straight. I mean, I think we've all seen the articles out there about the pandemic puppies coming back in droves and people don't want their animals anymore. And certainly it's not what we're seeing. Pandemic animals are not the same as like our general intake. What we're, the New York Times did a report. They actually called us for our data. The ASPCA did a survey. We're not seeing returns of animals that people adopted during the pandemic, which is really positive. But what we are seeing and what we're following the national trend, and we're consistent with what's going on nationally, is just the seasonal intake. When we think of the slides I'm about to show you, they're from January through May of 2021. And compared to January through May of 2020, it's totally different. So these last 5 months, we've really been in a pandemic, except for maybe May, where it started to change a little bit. And so you'll see the seasonal intake just across the nation is just starting to swing up. And I'll proceed to our intake data. And again, I just want you to remember that the intake trend is not pandemic animals. Intake may be going up, but it's not driven by anyone who has adopted during the pandemic.
And the one thing I would say there, Risa, since most of us I can see are on this call from our homes, is that many of us are not physically at work yet and won't be until the fall. So it'll be we'll want to keep a close watch on this. Because as I'm looking at the Zoom, I'm not seeing a lot of people in an office right now.
What about the ramp up in intake? Is there any kitten season effect coming back? I know last year was probably a good year for us with that respect, but do we envision this year to be back to 2019 level?
Well, I anticipated your question. So if we go to the next slide, you will see year over year. Year-over-year intake by source. So source is really, if you look at the bottom, it would be stray, owner surrender, end of life services. And what we did, Elaine, to your point, we went back to 2017 just to see, because obviously comparing ourselves to 2020 is not a good indicator, because that's 10.5 months of a pandemic. And going back to 2019, just to compare ourselves to 2019 is really not a good comparison either, because there was such a major event going on in our lives. So if you look at 2017, 18, and 19, the intake by source was, was sort of leveling out. And then there was this big shift in 2020. Remember, January, February, half of March of 2020 was business as usual. And so when we compare 2021, the first 5 months, you see there's a dip because, again, January, February, March, and even April is still, we're at pandemic. And like Denise said, a lot of people aren't going out the way they were. I think what's very interesting to note here is when you break it up by stray and owner surrender year over year from 2020 and 21, the stray number is down a lot. And again, I still think that's a reflection of the pandemic. With respect to owner surrender year over year for dogs and cats, it's kind of flat. And
particularly the cat number is very interesting. Would you quantify that group as more senior health issue cats or more young kittenish cats? Because that's interesting to see that's stayed pretty constant.
Well, you'll see when we get to the next slide, you'll see actually we're going up in terms of intake of cats, but in terms of owner surrender, it's just flat. And this is just data we're going to have to study, because I have a feeling that we're going to start to see an increase again, more people coming out. We are still, 2021, we're 4.5 months in a pandemic. So
So
it
Risa,
could really be that. People are
Risa,
still home. Yes.
I have a question. How does this compare nationally with other shelters? Did they all take, this is a very significant drop in intake that occurred during the pandemic. Did they also have a similar drop in intake as we did?
Well, if you go back to the previous slide of the national data that was sourced from Pet Health, they do national trends. If you look at that, you can see that the decline is consistent with what we're seeing, and then it's starting to go back up in terms of surrenders. The blue, the sort of powder blue line, it's starting to go back up. So we're staying, we're a little flatter than the national trend in surrender, but I think in the course of a year, because this is month to month again, I think we will average out with the rest of the nation. We are seeing the same trend with stray, though, you can see. So we're starting to, again, on the intake side, the national trend is it's coming back up. We're just going to continue to watch this. I don't think that we're any different than anybody else. If you go to the next slide, which is January to May intake by species, this is more to your point, David. You can see the gray being cats and the blue being dogs. It is kitten season. It is starting to go up. What we're starting to see is the pre-pandemic type of intake that we were experiencing before the pandemic. The smaller box that I have up there is just to look at May 2020. It's a little bit of the, with the exception of May, it's a little bit of an opposite effect. So, the intake was much higher the first couple of months and it was going down. Now we see our intake, especially with cats, is going up. And as you know, this March, April, May through the summer, that's when we really start to see the uptake in cats. So again, watching last year is a little bit, it's just, we're really going to have to keep looking at this data. Our expectation is that we're going to go back to consistent with the national trend, that we'll go back to seeing what we were seeing in 2018 and 19 with strays and surrenders going up. The one thing that we were pushing is on the surrender side, and I had presented this a couple of times previously, we want to see the surrender number go down. That's a real important aspect of animal welfare and serving the community. And hoping that the services that we provide to help prevent or to help support people keep their pets or to delay decisions and maybe get them through a rough spot, we would like to see surrender continue to go down. So that will be a really interesting thing to watch, because we know that economic hardship is upon us, that we serve a lot of clients who are faced with economic hardship. And fortunately, those are actually areas that we can help solve for. We have vouchers for vet clinics or spay neuter services, or, with the opening of Queens and eventually the Bronx, we'll have a clinic that our surrender prevention program can feed to our clinic. So perhaps we would be able to do dental work and really help people with their pets and help them keep them. So again, one thing I would like to emphasize with intake by species is the spike in guinea pigs. Guinea pigs has become like the new rabbit. Like, so many people had rabbits before the city banned the sale of rabbits in pet stores. There's really no regulation of guinea pigs. They're often, they're not spayed or neutered. If you are in the shelter, you'll see it's just really remarkable how the shift, we still have rabbits, but the shift has been a higher population of guinea pigs. So that is something also that's on our plate for, the future, whatever the elected official pool looks like, working with city council, working with the members of the health committee who were active in banning the sale of rabbits in pet shops, seeing if there's any momentum there. So I hope I covered your questions, David and Elaine. Because I want to move on to the next slide.
Thank you.
Okay, great. Which is the placement rate. Again, we're looking at just 5 months of data. And these past months, the placement rate was 94%, percent lower than a year ago. The placement rate is calculated. If you look at the bottom, there's a little footnote about how it's calculated. And I think what's important to see is the full breakdown of our outcomes. So we usually just talk about a placement rate, and we haven't done a good job of really providing the data that's behind that. And so I really wanted to break this down for dogs and cats. What we're looking at is the total number of dogs. So this first slide is just dogs, and the total number of dogs. The way we calculate that number, it's the start as of January 1. It's the dogs that are in the shelter, and then the intake over the last 5 months. And when you look at shelter euthanasia, it's 90 dogs for the last 5 months out of the 1,960. And that breaks down to medical reasons and behavior reasons. I do want to assure everyone that we do not euthanize for space. We do not euthanize healthy and mild-mannered animals. Any animal that we can place in a healthy environment for the human and the animal, that's the goal. That's what our placement team is striving for. These are cases on the medical side for humane euthanasia, illness without a good prognosis, and behavior cases. We have behavior cases. We have a lot of challenging animals that are aggressive or that ACC cannot handle, and that we don't have placement for. And so these are decisions that are very, very thoughtful. And again, these are not animals that would have otherwise found a home if we had made a little more effort. There's a lot of effort that goes into the placement and the decisions. The next segment of outcomes is end of life services. Formerly, we used to refer to it as owner requested euthanasia, but when we say it like that, it's just a number, and there's so much that goes into this. This is really a service. It's a service from the admissions part of the person coming in and having a conversation, and it's very emotional, to our team assessing the situation and how urgent euthanasia is. So we really want you to think of it as a service and not just a data point, because it is a very emotional and important piece of the work that we do. For anybody who's ever had to seek end-of-life services from the private sector, it is not, it's expensive. And we serve a lot of people in this community who really can't afford the services. And that's why we're here. And you can see 328 for the past 5 months. That number generally, and I don't have that data point, but generally that number doesn't change. It's pretty consistent every year that we provide this service for people in the community who need it.
Hey, Lisa, if somebody brings in their dog, it's a relatively young dog, so they're not at their end of their life and they're healthy, and they request euthanasia, what do we do?
That animal is, I mean, I won't speak to specifics, but that's not an animal that would be euthanized, and the client is advised that we do reserve the right to make a determination. But in that situation, I mean, there's such a conversation to be had there. You know, what is the issue? How can we help you? What, you know, what we would want to get to why they made that leap. And we do that with anyone. You know, sometimes there are maybe cases that just need more evaluation, and our team does evaluate them. as you can see, part of this number, it's not calculating the placement number, but we still have 135 dogs that are out in foster, and so they're still available for placement. We don't consider a foster the actual outcome. It's a temporary placement. Reunification is when it's either lost and found or animals that come in and are on DOH hold. Any animal that is able to get back to its owner. Adoptions, 314 of this number, and New Hope, which you see is substantial, 794. And when we get a few slides ahead in anticipation of questions about the size of the New Hope placement, Ellen's gonna talk about that. But just keep in mind that we served as a source of animals. Everyone who wanted to adopt went everywhere, from shelters to rescue groups, and rescue groups came to us. So we were really, there was such a tremendous amount of collaboration during the pandemic, and you can see that the rescue partners really did a tremendous job in pulling animals for us. And then the same, if you look at the next slide, it did the same thing for cats. And, you know, the number for cats is down. Part of it is we do have more cats than we did last year. You know, I will say one thing, and this doesn't apply to cats, but getting back to the dog slide, we are seeing a population of dogs that have really challenging behaviors. And that's definitely something that we're going to have to focus on as, you know, perhaps as more people see shelters and want pets even past the pandemic. What we may be left with is a lot of behaviorally challenged animals that we will have to think about in terms of what other placement options there are for them. With cats, though, you can see with respect to euthanasia, there's no behavior isn't an issue when it comes to shelter euthanasia. These are medical cases. And again, these are emergencies, cats that are not thriving, and decisions that are made with a lot of care. And then same thing we have a lot of cats in foster, as you can see, not as many that are reunified with their owners, unfortunately. Lots of adoptions and New Hope placements of cats. And so, you know, I will say that these numbers, these are really strong placement rates. Definitely the volume of animals that were coming in during the pandemic drive such strong numbers, but we definitely learned a lot about how to manage the population, and certainly having a lower population allows you to do more and spend more time with these animals. I will now just turn it over to Ellen. She'll drill down a little bit more into the program side of this data.
Hello. If we could go to the next slide, please. Thanks. Okay, I'm going to talk a little bit about placements overall. So, you know, as we've talked about throughout this meeting, you know, everything that happened in the past 16 months definitely had an impact on us, and it's changed the way that we're doing a lot of things. Some of them for the better that we'll keep, definitely, and some that we are really looking forward to going back to the way things were. So with adoptions, you know, we've had a lot of animals that went to foster, adopted by their foster parent, and that was a fantastic thing to see. What we're looking forward to is having people be able to come back in. So we have been having browsing appointments for cats, and we are doubling those at this point. And we're starting our mobile events, which we weren't able to have until recently. The first one that we had was just recently on May 29th, and I'm happy to say that we took 20 pets out and they all got adopted that day. So we know that people are looking forward to seeing us again. And a little further, we'll show our schedule of what's coming up. But we definitely want to keep expanding that. It's still a little challenging because getting a permit is not the easiest thing right now. There's still COVID restrictions around that. So we're mostly joining other groups that already have events started. So as you can see, we're still placing quite a few animals with New Hope. Our New Hope partners have been amazing throughout this. We have tried to expand more. So as you can see, we've added 15 new so far this year, and that's actually 17 because we've added 2 more in June, and we have a good amount of partners that pulled. So of those 2,148 animals, those went to 189 groups. And then we had 17 partners who all pulled, 30 or more animals. So that's been a really good partnership with them. And then this is really just talking about companion animals. But as you all know, we get so many other animals. This year has been the year of the duck. We have had more ducks than we ever remember seeing before, and they've all been placed. And then, just the crazy things like the pigs, a huge yellow snake that's like 6 feet long, all placed. So we've definitely had some really good efforts there with our other kind of partners. So if we could go to the next slide.
Ellen, you're welcome to use the pond in my neighborhood. There's some ducks there. I don't know if they mind having some new ducks enter the facility.
They want some friends. I'll keep that in mind the next time I walk in the office and there's 8 in a crate. Foster is definitely, absolutely thriving. I mean, if there's one thing that we can really take away from this whole situation is that foster is absolutely so beneficial in so many ways for the animals that go to foster and also for the animals in the shelter. It keeps the population in the shelter so that we have, more hands-on with those animals. But this is, again, a thriving program that we will continue. We've added 673 new fosters this year. We've really pushed to put more animals in foster really close to the time of intake. Animals that we know would have probably got adopted quickly in the shelter, but without having that traffic, we haven't. But that also allowed us to think, like, what else can we do here with this? And so we started putting a lot of animals in foster that we normally wouldn't because of behavior. And I'm talking about like cats that are really antisocial, or cats that came from hoarding cases, or have, that are really active in their cages. Same with dogs, that dog that doesn't have the good kennel presence, especially when we have good owner notes and we know that they've been successful in a home environment. By getting them out quickly before they can have any deterioration, that has been really beneficial for them. And we've had a lot of very successful adoptions of animals that typically would have lingered and probably been placed through New Hope. So it's really helped us to take that pressure off placing with New Hope and be able to do more adoptions. And that's something that will definitely continue. Also, just having more orientations for kittens. And David, you had asked about kittens. Last year, everyone, that was the big question in animal welfare. Where are the kittens? And it was never really answered. This year, we've got in close to the same number of kittens, but last year it was very spread out. This year, almost all the kittens we've got have been since the beginning of April. And we think that trend will probably continue, and we'll get a lot more kittens this year than we did last year. But as you can see, we're putting 41% of the kittens we get into foster right now. So we're really, really taking advantage of how generous people in New York have been with their homes. And we also reached out when the Queens fire happened. That really had a strong impact on a lot of us who were involved in that case, and realizing how important for people who are in crisis to stay with their pet. And if they can't stay with their pet, to know that they're going to get their pet back. And so we reached out to our fosters, and 276 signed up to be fosters specifically to help people keep their pets. And so that's something I see just really us going with and growing as much as we can. That's something we're really excited about providing. So next slide, please. So a couple new things that we've done. during this past year and especially recently. So Adult Pets is a pet adoption management system, and we just launched it on April 1st, but we were definitely in talks with them for many months. They had approached us, we had meetings with them. It initially did not communicate with Shelter Buddy, and in that way it was not going to help us, but they were really great. They worked with us. Our senior manager over adoptions and foster, John and Jessica, had a lot of conversations with them, and now it is completely integrated with our software, and it saves an enormous amount of time. And the way that it has been described to me is what used to take up to 5 minutes now takes seconds. So when we had that adoption event and had 20 pets, it would have normally taken so long to process all of those. It just cut the time like in half or more. So that's been a really positive thing. And it also has a way that people can do donations very easily. And we've already seen $3,100 come in donations there. So we're hoping that we can really maximize on that. And it also sends out like automatic emails every step of the way. So as we're doing these more remote adoptions, that's what has been so time consuming, because, you know, normally someone comes in, they look around, they pick the animal, you have the conversation process, and it's done. There's a lot of back and forth, there's Zooms, there's like all kinds of things that take a lot more time, but this really is streamlining it. And Adult Pets sends emails to the adopter throughout the process that kind of keep them up to date. They've applied to adopt an animal, and that animal gets adopted, they're alerted. It gives us a much better historical view of what different potential adopters have been looking at. So that's been something that's been really a time saver for us, and hopefully will be more of a revenue generator for us also. And then we entered a pilot with Dog Trust UK. It was initially supposed to start last March, and they literally had their plane tickets and were coming in scheduled for March 21st, 2020. Obviously that did not happen. So they went back and reinvented themselves into virtual training. And so we're working with them in two ways. One is Dog School, which we are now making available to all of our adopters. It's still a pilot, and they're piloting with us and Bidewee in New York City. They were talking with LA. I don't think that's happened yet. So this is really, you know, a big thing for them and for us. And so it's a 4-course, 4-session, low-cost virtual training, and it's $99. And we have, I spoke with ASPCA, and they agreed that we could define this as very, very preemptive surrender prevention. So they are going to allow us to use some of the grant funding to help people who can't afford that $99, so that we can support some lower income individuals to also get that training. And it's really, they've been so successful. You know, definitely have organization envy with them. They have 20 gorgeous locations throughout the UK. And I'm sure that the board agrees that I should probably go and tour them all once travel is more approved here. But anyway, so they're bringing that to us, and then they're also
better go business class too, at least business class.
Yeah, I think so. I think so. Yeah, I've never flown that before, but now would be the time. And they're also we've been in partnership with them to train our staff, and this is something I am beyond excited about. So there's a whole process where they go through and train certain designated staff to be mentors, and then those staff train the rest of the staff. And it's a very detailed training on dog behavior. And it's everything from looking at the day-to-day activities and kennel observations, and really making sure that our staff are very well versed in seeing each dog as an individual, each dog in the signs that they show us, and communicating that information throughout our staff to give that dog the best opportunity. We've had, you know, a lot of challenges with dogs in the past year, as Risa had mentioned, and that is also a national trend. The dogs that are coming into shelters are more challenging behaviorally. And I think that's because, you know, it's like the double-edged sword. Like, everyone has been so much more successful in helping people to keep their pets and to rehome their pets successfully. So the ones that they aren't able to do that with are the ones that we're still getting. And so I think that this will really go a long way, and also to help us really elevate the role of our animal care staff. so that they don't feel like their role is exclusively cleaning and feeding. They're also going to have more of a behavior component to their positions and be more involved in the overall wellness of the dogs. So that's
are there specific I know it's all over the board with behavior, but you know, are there specific things that are more prevalent than others, like barking, separation anxiety?
Leash biting has become really problematic.
Interesting.
Yeah, leash biting has become really problematic. And dog reactivity, which always has been, but that seems even more so. We had to purchase tops for all our kennels because we had dogs that were so reactive they could pretty much walk over, like fling themselves over at the kennel. Yeah, so we're just knowing that we're trying to elevate like the handling level of all the ACS staff and then take the behavior staff and have it so they can really focus on those dogs and do whatever we can modification wise with them. So that's a process, and hopefully the next time we get together, I'll have some good results and really be able to exemplify how we've made those changes. Next slide, please. So community pets, and I know I touched on this the last time we met. Community pets was like really by COVID, because everything we did was about meeting with the public, and suddenly we couldn't do that. And I'd have to say I'm like so proud of this team because they really redefined themselves and figured out how we could help people when they needed it the most. We did have to put certain things obviously on hold. We couldn't have clinics at the time. People weren't doing spay neuter as much, but we really looked for creative solutions, and we did have a couple clinics. They weren't the big numbers we're used to, but we were able to get like the most needing animals vaccinated, and we did.
And we just had one this past Saturday. I think we're getting ready to start up again, right?
Yeah, so we've had 2 large outside in-person clinics. The one actually that was funded by Council Member Moya was, I think, the highest number we've ever had at a clinic, and also had a really large number of cats, which was surprising. And there were, of the 194 pets that were vaccinated, 55 were actually cats. So definitely a major need, and the team has done such a great job like keeping in touch with people, and they've done so much with curbside delivery and developing a team of volunteers that helped with that. David, I think you one of those volunteers.
Yeah, and Joyce and Ann are they're terrific. They're really very dedicated and very diligent, and they're really doing whatever they can. So
they're really advocates for the people that need help. I mean, they really go out there and find solutions. So we've had 12 pet pantry events. We do it every other Tuesday for 1,349 clients. 89,000 pounds of food this year. I mean, just an amazing amount of food that we've distributed to people who need it. And then also we have the spay neuter clinics. The minute that Toby's was able to get back online with that, we started those again. And we just had a long list of animals and, pet owners who really wanted to get their animals neutered and spayed. We got them, we've been going through that. And then, we used to do in-person dog training classes in parks. We haven't been able to do that, but we have in situations paid for through grants, training for different animals to help people keep their pets. So I think we've done an amazing job. I'm really proud of all the staff because everyone has really held it together and came up with solutions. And you've all dealt with it in your lives too, and your work environments, like coming up with solutions to something that's never been experienced before. But everything has been done with the pets and the people like in their minds to do the best thing for them. So is there another slide? I think this next slide. Forward.
It's sort of like a good way to summarize your last slide, Ellen, just our road to recovery and how we're starting to inch our way back to services and programs that we were able to provide before the pandemic, and getting out there into the community and serving people who really need our support and also who want to adopt. And so you see on the right-hand side, there's a whole bunch of mobile adoption events. We're getting that truck oiled up and ready to go. We actually did one big event in Brooklyn Bridge Park. It was pouring rain that weekend, and nevertheless, every animal on that truck got adopted. So 20 out of 20, I believe it was. People are ready to see us in the community. And then the big thing toward beyond recovery, but really, really exciting news is our Queens Care Centers. So I'm going to shift it over to Jen to give an update on Queens.
Hey everyone. I just have some really great news. If you could go to the next slide, that'd be perfect. Thank you. About the Queens Care Center. As of this week, the second and third floor slab is complete, and the parking slab is also done. We're continuing the mechanical, sprinkler pipes, and ductwork. All of the masonry should be complete within the next 3 to 4 weeks, and the next major milestone is the roofing, which we hope to start next week. And we are still on track for a TCO summer of 2022. And I will pass it over to Christine Kim, the Senior Community Liaison for the Mayor's Office of Animal Welfare, to give you an update on the rest of the capital projects.
It's so great to see this building going up. Thank you.
All right. Hi, everyone. How's my audio?
Hi, Christine. We can hear you.
All right, great. So good morning, everyone. My name's Christine. I'm from the Mayor's Office of Animal Welfare inside the Mayor's Community Affairs Unit. And today I'll be giving a brief update on the animal shelter capital projects managed by the city. Next slide, please. Okay, as a quick overview, the de Blasio administration has dedicated $115.7 million for animal shelter development and renovation with the goal of having a full-service animal shelter in every borough. 2 of our existing shelters, which are the ones in Staten Island and one in Brooklyn, are in the process of getting complete ground-up renovations. Our 3rd existing shelter, the Manhattan Care Center, is getting a new standalone adoption facility. And there are also 2 completely new full-service shelters planned for the Bronx and one already underway in Queens. The Queens location, as you just heard about, is being managed by ACC. Unfortunately, due to COVID-19, there was a pause on many of our capital projects throughout 2020. It does push our timeline for some of these projects back by a few months, but the good news is that the pause was fully lifted on January 28th, 2021. So DDC, DOHMH, and the Mayor's Office were all very eager to resume once the pause was lifted, and I'm happy to report on the progress for each of these projects since January today. Next slide, please. Thank you. So starting with the Brooklyn Care Center, the design phase of the project was completed this March. We are now in the construction procurement phase, which is projected to end in January 2022. At which point construction can then begin. We anticipate move-in winter of 2025. I'm also sharing a few renderings with you here in which you can see the award-winning artwork that will be integrated into the Brooklyn Animal Care Centers. This artwork was one of the winners of the 2020 Annual Awards for Excellence in Design, and it beat out hundreds of other submissions. The piece is called Colorful Companions and is by Nigerian-born, Brooklyn-based artist Olalekan Jayefis. It is intended to represent the playful relationship between companion animals and their people, and it will be integrated into the exterior and interior of the new shelter. Next slide, please. Okay, this is the view of the pergola from the parking lot. The 2nd floor of the pergola has the dog runs and can be accessed by the exterior stairs on the 2nd floor of the facility. Okay, next slide, please. And here's a view of the main entrance of the Brooklyn Care Center on Shepard Avenue. All right, next slide.
Wow,
please.
so exciting to see.
Yes.
Beautiful design, beautiful design.
I agree. The renderings are great. Alrighty, so our Staten Island Care Center was the only one of our capital projects which was not on hold during the pause. So construction was able to move along, and we are currently in phase 2 of construction, which includes the main adoption entrance, the parking lot, and the dog run. Next slide, please. All right, the steel erection and painting for the main adoption entrance and all the facilities around the entrance are complete. Roofing and masonry block installation are still in progress. Next slide, please. Okay, so this completion or the ending of phase 2 construction at the moment has no impact to the shelter operations. We're very close to the end of construction. Here is the rendering of the completed Staten Island Care Center. The projected phase 2 completion date is fall of 2021. Okay, next slide. We're also making very steady progress on the Bronx shelter. Design completion is projected for spring 2022. Construction is projected to begin in winter of 2023, and move-in is projected for spring of 2025. I've also included here several renderings in this presentation to give you a sense of where we are with design. So here's the view of the shelter from Bartow Avenue. Next slide, please. This is the plaza of the shelter looking at the main entrance of the shelter. And here's another view of the shelter from Co-op City Boulevard, which, I mean, I guess depending on where you're driving in from, but it's more of like the backside view of the shelter here. Okay, next slide. And last but definitely not least, very exciting news. We have broken ground on the Manhattan Pet Adoption Center. The groundbreaking ceremony was held on June 2nd, 2021, just a few weeks ago. The building, which was formerly a garage, has been emptied and turned over to DDC to begin construction. So next slide, please. Here are a few familiar renderings of what the front entrance on 109th Street will look like when it's complete. Again, this design also won an award. As you can see here, there will be a large window that offers viewing of adoptable cats, and the facade of the building has a steel rain screen that adds depth and color. With construction beginning now, we anticipate a move-in in January 2023. And that concludes the update on the city-managed capital projects. Thank you, everyone.
Thank you so much, Christina. I just want to echo again Risa's thanks on behalf of the board for all the work that you and your colleagues have been doing, especially during this pandemic, behind the scenes and often on the front lines with us. So thank you so much. Can't thank you enough.
Oh, thank you. Thank you for that. I appreciate the recognition, and it's been a pleasure working with ACC.
Christine Bubbles, the senior one-eyed kit that was the event, was a reunification, return to home.
Oh, that's great news.
Yeah.
Oh, I'm so happy to hear that. There were a couple of adoptable dogs at the groundbreaking, and they were just the best ambassadors for ACC dogs. And everybody just loved this one old dog, Bubbles, that was like clearly a couch potato, had one eye, and it like such a favorite of the event. And I'm glad to hear that he's back home.
Nice. So we're going to thank you, Risa, Ellen, Jen, and Christine again for this update. It's there's so much good news there and incredible numbers around the live release rates and these programs and the way we're working with the community. And again, working so closely with all our rescue partners. It's very energizing and exciting to see as, you know, again, as we're looking to the future with all these incredible new capital improvements, these new shelters and adoption center. It's really, really exciting. We're going to move to our public comments section. And again, just to remind everybody, we're asking for a 2-minute limit in terms of your comments and questions. We have your name and email so we can follow up if there are questions or issues that need more work. We'll be reaching out to you. And again, please be polite and civil. And again, the board is always eager to hear from the members of the public and from the people who take the time to attend these meetings in whatever format they are. So we really appreciate your attendance, your concern, and your support for us. And as you can see, there's a lot of work to be done, a lot of help, and many of you are the volunteers and working with other rescue partners that help us get all this work done and care of the animals. So thank you in advance, and we look forward to hearing from you. Over to you, Katie.
Okay, so we have a couple questions that people have sent in, but we're going to start with Neil Shayer. Neil, I'm going to unmute you for you to ask your question.
Hi, can you hear me?
Yep.
Hi, my question is about the New Hope program and ACC cats. ACC's website says that the New Hope partners that pull animals from ACC place the animals into permanent homes immediately or care for them off-site prior to finding them permanent homes. But ACC places cats with a New Hope partner, Neighborhood Cats, I believe is the name, that makes clear on their website that they put cats back onto the street rather than finding the loving homes for the cats. New York City law only permits feral cats, defined as a cat that has no owner, is unsocialized to humans, and has a temperament of extreme fear and resistance to contact with humans. But ACC's website says that if a cat is truly feral to a significant degree, so it seems to be something less than truly feral, only to a significant degree, that the most compassionate choice may be to allow the cat to live outdoors. So my question is, does ACC place cats that are only feral to a significant degree with New Hope groups like Neighborhood Cats? Or do only feral cats, as defined in the law, get placed with groups such as Neighborhood Cats? And with regard to the compassionate standard, does ACC use a compassionate standard or a legal standard in determining which cats belong on the street? Thank you.
Ellen?
Sorry, I would defer to Jessica or Jen on that.
I don't think Jessica is a panelist.
Well, there's a lot to unpack there. So we're talking about feral, we're talking about Neighborhood Cats, New Hope. And I know that we've talked about this concern in prior meetings. Neighborhood Cats takes ownership of the cats that are placed back in the community, and they work with us to determine which cats those could be.
Sorry, Risa, I was muted. I couldn't find my unmute button. So the cats that are placed through Neighborhood Cats are absolutely feral. They have no other option. They could not, to be in our shelter would be so terrifying to them that it would be inhumane to keep them for a significant period of time. They will get sick because, as you've heard before from Dr. Brennan, stress is the #1 cause of illness. So these cats, it's very few cats, but there is no other option for them. So it's either sitting in a kennel for, however long until they get sick, and then euthanasia is the only option for them because they're not going to be adopted. And our behavior team and Jessica's team, they assess these cats and they can give you details about that offline, but I can't speak to that. But I do know that this is the only option for the cats that are placed through Neighborhood Cats.
Okay, thanks, Jen. So Neil, we have your email. We can get back to you on those further questions. So I've got a bunch of questions via the chat. Deborah Thomas, who is a wonderful volunteer, would like to know when we are going to open for full capacity based on New York restrictions being lifted.
So Deborah.
I can take that as well.
Okay. We have a COVID task force, and so Jen.
Yeah, and
Dr.
so
Brennan.
the Cuomo it was just yesterday. We have a meeting scheduled tomorrow to discuss the developments and, issue new guidance.
Thank you. The next question is from Marianne Skinian. How much money is being spent on low-cost spay neuter services, and is there any collaboration with ASPCA and Best Friends with this? And on another note, how many employees actually work at ACC?
So on the low-cost spay neuter, we have grant funding for everything that we do through Community Pets, and that is done through Toby's mostly, but we will also make appointments with some of our surrender prevention vet partners for that. ASPCA provides us with services for ACC animals on a regular basis to spay neuter them. Best Friends, we have not worked with them on spay neuter.
Okay, thank you, Ellen. The next question is,
I think one other question was how many people work at ACC, am I correct? Right, so currently our roster is 224. And we have in the budget, we're pushing to get back to 250 for fiscal 22.
And I've been corrected. Spain, Best Friends did give us some grant funding for spay neuter for kittens.
Thank you. So the next few questions are from Esther Kozlow. Okay, one is, and it's regarding ACC expenses. What does the $1,033,000 in professional fees entail? The City Council proposed that ACC would need $300,000 in site security. What does that entail? And the 2022 budget does not assume a $3.4 million enhancement from the city. How will that loss of extra revenue affect ACC operations? And then there's a question about community cats, but let's do the finance questions first.
I'm going to take the first question, which involves what is included in professional fees. So professional fees is a roll-up of a combination of some program direct and some administrative costs. On the program direct side, outside vet services was about a cost of about $357,000 of that amount. Per diem vet services is another line item that was an additional 58. So I think I just noted that's about 405,000 of that total. Then on the administrative side, it'll include things like financial consulting and auditing and other kinds of accounting services, and that totals about 496 altogether. We have another line item for security services fees, which is about 55. And I feel like I'm missing something. Oh, tech support, outside tech support, and that's about 30. I believe if you add all those up, those numbers up, you get to about the $1,033,000. I don't think I dropped anything.
Who wants to address the site security?
Sorry, I was trying to unmute. Site security, we have always felt that cameras or from time to time security guards, but really improving the security on site with cameras and key fobs and access to the shelters in the evening.
And then the 3.4 million one-time enhancement.
So we do not anticipate any one-time enhancement in this fiscal year. We have not received word on whether there was any additional money. We created our budget based on the 34-year contract amount that's in that budget. And if we do get something more, we will certainly report back. But as of now, we do not anticipate getting it. And so what we did is the budget reflects that. We pared down where we had to. The 3 million was always used for enhancements because we knew we weren't going to get it. So it wasn't like we added staff that we can't that we can no longer afford, and we used it toward programs and resources and things like that. So we offset it with fundraising, and certainly with the pandemic, we were able to get by without receiving the full amount, although we anticipate for fiscal 21 receiving part of that one-time enhancement.
Thank you. So there's a couple questions that are similar, so I'm going to loop them in together. And I may ask Jessica Vaquero to address these. They're from Esther Kozlow, Lindsay Frieda, and Susan Wolf. Why isn't neighborhood cats listed among the groups that pull 30+ animals? Lindsay wants to know, do we break out the number of community cats from our New Hope placements? And Susan Wolf would like to know, does the New Hope number include community cats?
I can answer the first question. It's because neighborhood cats only took 20 cats.
And I think we can break out the CCP cats. Let me just unmute Jessica. I'm not sure. I'm not finding Jessica. But I think that we can, and we can get that number back to you, Lindsay. And then the final question, yeah, New Hope numbers do include community cats. I'm pretty sure that's correct, right? Yes?
Yes.
Yeah,
Okay.
it's included. Yes, it's included.
Okay, thank you. Okay. Next we have Marilyn Galfin who would like to speak. So Marilyn, I'm going to just unmute you. I'm unable to find Marilyn on the list. Sorry. Can somebody help me find Marilyn? Oh, sorry. Okay, I think I see her now. Okay, Marilyn, you are unmuted.
Oh, hi, Katie. Just a couple of very quick questions. There was talk about the ACC ending the lease of the Park Place office. Has that happened? Because I know there were hundreds of thousands of dollars that was going toward the rent of that building, which can be used for the animals. So what is the status on that? That's one question. Number two, I haven't seen, maybe you have done it, extensive outreach for fosters for the big and behavior dogs. I'm not seeing that anywhere. So I don't know what's happening with that. Also, I had asked, I've sent numerous questions to the info. I have not had a chance to get back to Ellen, which I will, but in the meantime, I have sent various emails with no response. And I would like to get a response to the emails. One of them, I'll just quickly, in the audit by Scott Stringer, one of the recommendations in the audit was for sound mats that help absorb the sound. which would help with the stress of the animals in the shelter. Have sound mats been implemented? And the other thing, again, I had many little questions. I'm noticing again, there hasn't been, with the behavior dogs, we're seeing very few rescues that are pulling behavior dogs. And the other issue we're seeing is that when people, members of the public, are putting in applications for the behavior dogs, it seems that very few of them are getting approved. And it seems to be very problematic. Yet we're noticing that a lot of the, some fosters, the animals are going out with no behavior issues. Something happens, we don't know what happens, at the foster's home, and the next thing you know, they come back into the shelter with either a behavior issue or maybe a bite history. Then they end up on the emergency placement. So these are some of the things that I would like to bring up now, and if people can also respond to my inquiries that are sent to info@ to go into discussion with some of my other concerns.
Okay, thanks, Marilyn. So Jen PB, I'll let you do the first, the lease.
Yeah, the question about the lease. So we've never had the opportunity to get out of our lease. I did negotiate an amendment to the lease that in exchange for 3 months free rent and a 30% reduction in rent for 17 months, we extended the term for 1 year. So it was a savings of almost $230,000.
Awesome.
And it's also tied into the Bronx shelter being built and part of Queens. We need a place to go. So admin has a function to serve, and there's no room at the current care center. So the timing of getting out of the lease at our headquarters is in line with those two care centers coming on board.
Yeah, 2025, right?
Well, actually, we'll be out of our lease, I think is, Jen, correct me, 2023 when we'll be done. But clearly the pandemic helped us realize how efficient we can be without in an office with lots of file cabinets, et cetera. So we're paring ourselves down gradually, and we will be out of that lease in 2023.
Oh, great.
I don't think some people who haven't been to the shelters realize that every ounce of space is used for the animals or for storing things for the animals, and that is why there is the offsite office space. So regarding the behavior fosters and behavior New Hope applications.
Yeah, I can take that. And also the sound mats. We've been having a lot of conversations about sound. We know that it's something we want to improve. It's hard. I mean, we're trying to be fear-free, and then we have, you know, cats that can hear dogs barking and rabbits that can hear, et cetera. So the hard thing with the mats is being able to clean them and make sure that they're not just giant fomites of spreading illness. We were requesting and trying to find out if we could have some kind of a sound specialist come in and help us with that. We've also discussed moving certain animals, and that we're still looking at potentially moving the rabbits to a different, actually kicking the managers out of the Brooklyn Care Center office, moving the rabbits in there, moving the, you know, so it's a lot of like moving pieces, but it is something that's important to us, and we continue to look at and just find a solution that doesn't come with other problems. And then in terms of the large behavior dogs, we actually created a new category called level 4 behavior, which were previously dogs that would just have been New Hope only. And we have had them in and we have had adoptions on them. They're a little, we definitely need someone who has experience. This isn't going to be a first-time foster or a first-time adopter. It has to be someone who's willing to take on an animal that is going to need constant behavior work for the rest of their lives and management. Not a dog that you can just walk down the street in New York dog park, certainly. The reasons that we've had some dogs come back, unfortunately, we've had some dogs in foster with this new, you know, kind of pushing the limits on what we can do, but we've had some bites. And some of them have been significant. So, you know, every time that happens, we have to kind of pause and take a look and make sure that we're taking human safety and the safety of other animals into consideration too. But it is something we consider continue looking at and trying to see where we can do more, again, without sacrificing any safety for people or other animals. I think that, was there anything else, Katie?
No, I don't think so.
Okay.
And just to reiterate that the emergency placement program has been extremely successful. We were able to place between 96 and 98% of them. So it's really a good program.
Yeah, I would also, if I could just say one other thing, that the numbers, like, I'm really happy that we broke out like all the reasons for euthanasia, because I think a lot of people used to look at our numbers and see 94%, which is amazing, by the way, but they'd still see 6% and say, oh, well, they just killed 6% of the dogs. And then you see that that's not the reality at all, that most of them are either owner requested euthanasias or medical. I mean, we've only euthanized 41 animals this year because of these. And I think that's amazing.
Thanks, Ellen. So, okay, now we're going to go to, oh, Jessica, were you able to address the New Hope pre-screener, which also has been extremely successful?
Sure. So our New Hope pre-screener form is where members of the public can fill out some basic information about themselves and express interest in a particular animal to potentially be matched with a New Hope partner to pull. We have had thousands of pre-screener responses, and our team goes through them on a daily basis, talks to the applicants if we have any questions, and if they seem like they're a good fit for that particular animal, we will reach out to our new partners who are interested in taking on new fosters or new adopters. Unfortunately, the pre-screeners have become popular in a segment of the internet where people are filling out quite a few fake applications. So for every real one we get about 10 fake applications where when we call the applicant, phone number is not in service, or the person's like, what do you mean? I wanted to adopt a small dog. So if you're talking about why a certain segment of applicants haven't gotten approved, it's probably because of the fake applications.
Thanks so much, Jessica. I think your team has done an amazing job. The New Hope team has just been so great. I know that the emergency placement whole program was developed with the partners that pull the most. Right? And they're okay with exactly how everything is rolling. And so until we hear back, I think that we're in a good place with emergency placement. Marilyn had asked if we were going to change anything with that. Now I have a question from Deborah Kalish. She's a new volunteer asking about the dryer situation. Dryers often non-functioning. Why does it take so long to fix them? What is the story with Con Ed? Can someone on the board expedite the fixes? Lack of clean laundry is important to animal well-being.
I can speak to the gas dryers being offline. So the gas was shut off, I want to say last September or October, because of a gas leak. The repair work was done and Con Ed came to turn the gas back on and realized that the gas dryers had never been properly permitted. So they could not turn the gas on until DOH had some engineering work done. By the time that was done, it was too cold to turn the gas off for a significant period of time. It would have had to have been shut off for about 5 to 10 days. So that's not possible in November and December, January. So it wasn't until recently that it was warm enough to get it turned back on. Con Ed, DOH worked with Con Ed to have them come out last week, I believe. the work on the ground is being done this week, and then DOH is going to have Con Ed come back to turn. Oh, sorry, the DOB will have to come inspect the work. Then Con Ed will have to come back in to turn the gas on again. And so hopefully the gas dryers will be online within the next several weeks.
Thanks, Jen. Okay, and then finally, we have one last question from Esther. Esther, I'm going to unmute you.
Thanks.
Okay.
First of all, thank all of you at the ACC for your work. We really appreciate it. I do have a question about stray cats. I was previously told by management that all cats that come in as stray are marked Community Cat Pathway, CCP. But those who have an owner, they are returned to their owner, so that's different. But that all stray cats are CCP. And I was told that Neighborhood Cats putatively places them. They're placed with them in a way of speaking, but they're all returned to the street. Now, where am I wrong? The first thing I've heard, the first time I've heard that only feral cats are returned to the streets is very different from sessions and communications ACC has made to the public about the Community Cat Project. Can you explain that? Are you telling me that only feral cats are returned to the streets? That's my question. Thanks.
Thanks, Esther.
And I can talk to this if you'd like, Katie.
That would be great.
Whenever a cat comes into the shelter, we collect what we call is a stray cat history. So that might be what you're thinking of with all cats being placed on a community cat pathway. They're not placed on the pathway to go back outside, but we do collect history about who the cats are, where they came from, how long they're in the area for. Really, that's just good data for us to have as we look to study our intakes and where animals are coming from. The cats that are coming back out through Neighborhood Cats go through a formal process where Neighborhood Cats requests to pull them, and the program has evolved and I think changed a lot over the years. And in its current existence, they are only taking the feral cats that don't have other options.
Thanks so much, Jessica. And then that wraps up the meeting.
Hey, Risa, do you have any closing remarks?
Yeah, I really appreciate the level of engagement today. And certainly we respect the public's comments, and there's just so much time that we can spend on this. And if you feel that you haven't gotten as much information as you need, please contact us. Marilyn, your comment about the info account not getting responses. I think that we have been pretty on top of that, but again, send us an email, identify yourself, and we will, that's the method, that's really the best method of getting in touch with us with questions. So we appreciate the conversation and we'll continue the dialogue with anyone else who has questions. But thank you everyone, the board included, for your level of engagement, and thank you to the ACC team for all the involvement and the work that went into putting this together.
And thanks to everyone again, the board, the public who've attended, and all the team at ACC. As we've discussed and as it was mentioned earlier, we do still have some work to do on the FY22 budget, and we look forward to that. And again, I want to really call out a special thank you to Sandra for all the work she's been doing on the financials as we've been moving from an old legacy system to a new one that we have much more control of. And, you know, this is not an easy task and it's a lot of work, and to have budgeting on top of it all is really challenging. So again, like, we know that this is, you know, a growing pain as we move into this new system, but it's going to be great for the future. And so we will all get together and get this budget going for FY22. We are going to move into executive session to talk about the governance I mentioned at the start of the meeting. And so I would like a motion to do so. And I should mention, we are well behind schedule. That seems to be a norm, particularly in these online meetings. Let's take a short break, board members, of about 10 minutes, just to comfort break. And then we'll gather at 12:10, and we'll conduct our executive session. May I have a motion to do so?
I motion.
And a second.
A
All in
second.
favor?
Aye.
All right, so we will move into executive session commencing at 12:10. Thank you all again. See you soon, board members.
Thanks.